Hello everybody, welcome to your Thursday edition of the TraderMerlin Show. Jimmy T, Eric, Tom Barr, we got Jim, Base, Dana, Ken, Big Eb, of course, Meznok, and David, who you're probably getting sick of me, David. You see me Thursday nights in the CIL. You see me Tuesday nights, Thursday morning. You see me every day on the show. I hope you're learning something, but glad to have you with us, David. John, and well as Les Gold starting things off. Today's show, well, I guess we should start with a little bit of, what's really important topics out there, which is go Atlanta Braves. And for anybody who's a Dodgers fan, maybe I'll get rid of the Braves sign and just say no Dodgers. No Dodgers. I'm hoping that they choke tonight. I'm hoping the Braves knock them out. Boom, get out of that playoff picture, Dodgers. As far as the Red Sox one goes, because we've got friends that watch this show who are involved with the Houston Astros organization, I'll say, let's go Astros, even though I grew up a Red Sox fan. But anyway, sports are fun. I love it. I do feel stalked, David. No. It's sometimes I just feel like I'm probably getting annoying at some point for you. Anyway, today is going to be predominantly Q&A. I drew this one up here, Q&A for the 21st of October today. I have a bunch of questions that have come in, so I figured why not start off with that, and then, of course, field yours as they go. I'm sure you have a lot of questions about different topics, and, of course, as you know, I love answering questions as well. Support this state. I am supporting the state, Tom. I'm supporting California by the only really good baseball team in California, which is the San Francisco Giants. I just look at the number of World Series. It says it all right there. All right. It's funny. I think I told you guys I grew up in NorCal, and that's why I'm a Niners, a Giants fan, Warriors. I don't really care so much for hockey teams, but I'm a Ducks fan, I guess, because I'm here. But my stepfather, who really is the one who got me into sports. He's the type of guy who would just scream at the TV as if the players could hear him, and he had a hatred for the Dodgers, and of course that was ingrained in me. So I don't really care. I just like talking trash at Dodgers fans. It's fun watching people get hurt, or not butt hurt, I guess is the term, not physically hurt. All right, so let me start off with big picture, and then I've got a couple of interesting things today. I'm going to start off with some macro numbers just to set the stage. It's true, we're going to secede from the Union. NorCal will be its own separate state. So let's go into economic data just because that was interesting, as well as earnings. And I'll give you guys a little bit of a quiz here. You notice we've got some earnings on the screen, and everybody beat earnings. I mean, it was just, without exception on this list, it was 100% beat. And Drew, I feel bad for Drew. He says he's an Angels fan. I actually like the Angels. I think they're pretty good, but unfortunately, they just don't seem to make it. Yeah. I want you to focus on one in particular, though, and that is this line right here, Snapchat. See, I put a little red box. I'm curious. Notice how much they beat earnings by, guys. 183%. They're supposed to earn 6 cents per share. They came out at 17. That is a gigantic beat on earnings. What do you guys think? What do you think happened to the price of Snapchat, right? If you're forget what you guys have seen on this program, but you're novice, you're starting out, and you see, wow, Snapchat absolutely crushed earnings, destroyed it. What do you think would happen to it? Obviously, I'm setting the stage here for a very interesting price chart. I'm loading it up right now as we speak. You would expect this to probably have a pretty big up move, and it does still exist. Actually, from the millennials I talked to, they like it. It has some really cool features. But right, Big Ev, you would think this, actually wrong, Big Ev, you would think it would be straight up, right? Take a peek at this chart. It was down at one point over 30%, just straight down. It was crazy. Went all the way, it closed right around, call it 75, and it hit a low just a few minutes ago of 53.88. So you're talking over a $20 drop in Snapchat on huge volume in the after hours, bouncing back up nicely now. I think that's to be expected. You would normally expect to see a little bit of a bounce there, but I thought this was an interesting one that we could share because it's not even buy the rumor, sell the news. It's just you can't trust anything, right? Because if you look at the price chart going into this, if you thought that they were going to have blowout earnings, well, look at the daily. It hasn't done anything for a month. Right? Just traverse sideways. So I don't even think this is a buy the rumor, sell the news. I think this is just main reason why I keep saying I don't trust earnings announcements. I think they're an absolute crapshoot. You don't know what you're going to get on face value. Drew says it right. Oh, snap. Yeah, that one took a big dive today. You have one like Crocs. Those wonderful shoes out there, right? I don't know if anybody here owns a pair of Crocs. It's funny. I actually liked Crocs for a while, and I was like, they look stupid. And then I went to Southeast Asia, and people are paying $50 to $60 for a pair of these plastic shoes, rubber shoes, if you will. And I could buy them for $2 a pair in Thailand, the exact same shoe without the Crocs logo. So I just loaded up in Thailand and came back with a whole bunch of knockoffs, but no one could tell the difference. Crocs beat by 30%. I'll show you that price chart there. Boom. There's your Crocs down around the middle there. You can see right here, 30% beat, and they had a decent day, up roughly 9% on the day. Here's your daily of it, and I gotta go to the 5-minute chart, and then we should be able to see the 24-hour. Come on, why are you not showing me the 24-hour? Yeah, there it is. Oh, that's why. CROX. The wrong ticker symbol. How would I put the right ticker symbol? There you go. There's your Crocs chart. And I'll go back to the daily. It's not bad. Anyway, again, I don't really mess with earnings. Leave them alone. Is it the disappointing forward guidance? Yes. So it's the disappointing forward guidance. It's also in there they talked about how Apple, cracking down on certain things, basically ad revenue was hitting them pretty hard. But my goodness, a 30% drop in almost no time. How much of their ad revenue is being taken away by Apple? So anyway, thought that was an interesting one. The other one I actually was watching today is you see down here at the bottom, you see FCX, Freeport-McMoRan. I've been wanting to add some to my portfolio. I should have done it a couple months ago. I just didn't. Have been too busy. But I do like what Freeport does. And then you look at the price chart of it. Today they came out with earnings that were up 14%, but they were down 1.35%. So, if we get down to maybe the 35 mark, I may add some. I'm actually thinking of potentially selling the $30 puts right now and being happy if it gets down to $30 on FCX. All right, so what else do we have? That was your earnings. And again, there's more earnings announcements coming tomorrow. I'll talk about that in a little bit. But you did have some nice economic data. Come on. There you go. This actually was a surprise to me. The main thing I was really surprised on here was the existing home sales. Because remember, we talked earlier in the week about how you had building permits and housing starts not showing, I guess to say, significant numbers. Here you have existing home sales way above expectations. Previous month was 5.88 million. They thought we'd increase to 6.1 million. We came in at 6.29. That's an extra 190,000 homes sold. Now, of course, we'll get here, I think it's next week or maybe the week after, you'll get the Case-Shiller Composite 20 Home Price Index numbers, which will tell you how the value of those properties has been increasing or decreasing. So it's one thing to have sales, which obviously is good. It's robust. It's good to see the transactions going on, especially increasing. But are the costs of those homes rising as well? That'd be an interesting one. Lastly, from the U.S. perspective, there was a lot of excitement and joy today because the expectation was that we were going to see a little bit of an increase in unemployment claims to the tune of about 2,000. We actually dropped 6,000. So that was a nice departure from expectations. You'll notice they're above, though. No one talked about this at all. The Philly Fed Manufacturing Index continues to slide. Now remember, anything above 0 means expansion. So still at 23.8, and I'm referencing this number up here. Let me grab my wonderful drawing tool. That one. All right, 23.8. That's still, showing growth, although it's slowing quickly. It was much higher, and now all of a sudden that manufacturing index numbers are starting to decline, and we'll see if they continue. Obviously, I look at the Empire State Manufacturing Index as kind of the lead dog, and it's been declining as well. All right, that is the basics of some of the macro pictures out there. So let's see. If you sell the puts on FCX, will it be weekly or monthly? That's a good question. I've been so busy right now, Les, I would probably do monthlies. And it's just because I don't have the time to watch. Like today, I wanted to make some trades. I didn't get any trades off today. Just unfortunately, I was busy doing the Crypto Investor Live program this morning, which requires a lot of work, and we talked a lot about some cool stuff. We were looking at decentralized exchanges and non-custodial wallets. My brain was focused on that exclusively, so I didn't get anything fired off today. Unfortunately, I did the day before. Hopefully tomorrow I'll be able to make some nice trades as well, but those will probably be monthly. I may actually put that in my 1% account, but it'll be a monthly period, most likely. Okay, let's see what else. Have you ever heard of anything about the CHF changing their peg? My account today wouldn't let me trade anything. No, I haven't, Pepper. I don't really follow the Swiss franc too much. Since I would say about 2 years ago, I just started trading a little bit less of the spot market. So usually when I'm trading future or trading forex, it's going to be through the forex markets. I still have a forex account, but I really just don't use it too much. So unfortunately, I'm not really paid too much attention to it. I can check for you and maybe get back to you on that one, Pepper. But I don't know off the top of my head what they're talking about, what they're pegging. All right, let's see. Let's go to their listener questions here because I think this one's really interesting. Obviously, we talked about BITO yesterday, which was the Bitcoin ETF that was revealed on Tuesday. It went live on Tuesday. And at the time, it had $20 million worth of value in it. So I'm pretty sure that ProShares had to come up with a certain amount of financial backing in position, and that was the tune of 20 million. So it was 20.0, and I'll show you some numbers here in just a second. So I thought that would lead into a nice question here from Fiona, who says, if I want Bitcoin exposure, should I buy Bitcoin ETFs? This is, again, going to be very subjective. I think it's going to be very overly opinionated on my part because I know Tom here would probably say, yeah, go for it, buy it, right? I'm going to go out and say I don't think you should buy it. And there's a couple reasons why. Number one is the fees associated with it are, about, call it 1% per year. However, there's a lot of other things inside of BITO that could cost you a lot more than that. We've had John Rowland and others on the program talking about contango and backwardation. What you have here is contango because what's the longer term, the further out we go with Bitcoin futures, those prices are being driven up because of expectation. And you may end up paying more money for those futures products than you need to. And that's just basically because of demand. Now what's happened is because BITO has gotten so much money, over $1 billion has poured into that thing in just 2 days, they've had to buy so many futures contracts that anybody who's a futures contract seller is backing away their price. I mean, I'm hoping that makes sense to everybody. Let me know if that does not make sense. Imagine you're a seller of a future. You're going to sell some futures products, right? And you see BITO, this ETF, come online and is gobbling up every futures contract that they can get their hands on because they have to for their portfolio. Are you going to sell it at the same price you were just selling it at? Or are you going to bump price up a little bit? Maybe even a lot. Yeah, you're going to bump price up. I mean, if you know that everybody in the world wants your product right now, raise your prices. Do it. It's called inflation. All right, supply and demand. It's not like you're doing anything bad. It's just saying, hey, everybody wants these futures contracts. I'm jacking price up. So if we look at the construction of BITO, they're predominantly in the October's futures contract and November. There's a problem here, and I'll explain more as we progress, but there's actually some big problems here. So let me show you some risks. I went through the prospectus of BITO yesterday, and I was just reading through all the details because I'm that type of person. When something comes along, I want to know as much as I can about it. Granted, I'm not an expert in BITO or how it's the pricing is. The pricing still is kind of a mystery. However, I did read through the prospectus to see the risks. Do me a favor, type into chat some of the risks that you think that they would be putting in their prospectus. So ProShares has to disclose risks. What kind of risks do you think that they were disclosing in their prospectus? Or maybe even how many different risks, right? I think it was 3, 5. I mean, how many? Type it in chat. Make it engaging and fun here. As I take a sip of my iced tea. All right, so I'll wait for you guys to type in here. Just go hog wild. How many different types of risks do you think that they put in their prospectus? I actually, on the next screen I'm going to show you here, I will list them for you. And I'll give you a little bit of a clue. That's your first one. Authorized participant risk. Now, I'm not going to run through the qualifications or description of each one of these, all right? Some of them I will stop and pause just so you guys have a good understanding of what on earth it means. Mike says 75. That's a lot of risk, buddy. 100, man, you guys are jumping. You're ahead of me. Why does BITO just use Bitcoin itself versus futures? Okay, great question, Margaret. We're going to get to that. So check this out. First one for BITO, their risk list in their prospectus is authorized participant risk. And there's paragraphs to each one of these guys. Next one, we have cash purchases and redemption risk. You have early close, late close, and trading halt risk. Cash and money market instrument risk. Because what's stupid about this is, great one, Medic, 420 all day. I don't know if anybody caught the Elon Musk reference where he talked about 69 and 420 in the artwork on his Twitter feed. That was pretty funny. This, in my opinion, a Bitcoin ETF should be invested in Bitcoin futures, right? Because it says it's Bitcoin futures. However, when you pull back the hood on this one, you see it's not just Bitcoin futures. They've got cash, they have money market instruments, they have bonds, right? They have short-term treasuries. It's like, wait a minute, am I not buying a Bitcoin ETF? So these things always make me nervous. And remember, when you move from a money market fund into a Bitcoin or to Bitcoin futures back into, let's say, a bond product, every single one of those has fees associated with it, and those fees are going to get passed on. How do they pass them on? It's not going to be like they're charging you the fee for it. It's embedded in the price of BITO. So they could be, yes, there's a flat management fee of 0.9%, but you might be paying an extra 1 or 2 or 3% just in transaction fees, depending on how much they're doing. So let me keep going through the list here. What was the next one on my list? The cost of futures investment risk. So there's, transacting and constantly buying the forward contracts. You have Bitcoin's futures capacity risk. This one is very interesting because I think this poses one of the biggest problems there is with Bitcoin futures. There is a maximum number of Bitcoin future or futures products, period, that somebody can hold in one account. You guys know what it is? There's a maximum number of futures you can hold in an account according to the CME. They put a limit on the maximum number because I guess you don't want to have a whale or somebody who's too big who could pose a systemic risk to that asset class. So for example, let's say a futures product trades, 8,000 futures contracts, and one individual has 3,000. That person could systemically disrupt that entire market by just selling at market, if that makes sense to everybody. So the number there is 2,000. Right now, the most futures products that BITO could hold in their portfolio in any 1 month is 2,000. So let me show you another graphic here. Bear with me as I find this one. All right, so here is the BITO, ticker symbol ProShares ETF, right? You can see right here, this is as of yesterday, so it's probably changed today. They have 1,872 of the October. So it's the BTCV is the October month, and they have almost 2,000. So what happens if more demand comes on for this ETF and they have to buy more futures products? Well, they can't go over 2,000 here. So what they're going to do is they're going to start buying further out. Notice they've already got Novembers, and they already have 1,400 of the Novembers. Well, we are right now on the 21st of October, right? Which means we're going to see these futures contracts expire. So they're going to have to start buying the next month. If as soon as October's get rolled out, which should happen like today or tomorrow, they're going to have to buy the November futures, which could max them out already, if that makes sense, right? They would already have the maximum number of Novembers. So now what do they have to do? They're going to go out and start buying December. And remember, when you have contango, that means that the futures, the next month is going to be a higher price, and the month after that's going to be a higher price, and the month after that's going to be a higher price. It's a natural expectation of price acceleration. And when demand is so high, what do you think those contracts for December are starting to look like? Prices are higher than they should be. So what happens is this Bitcoin ETF is going to buy those Decembers because they have to. They can't buy any more of the December or Novembers if they get up to 2,000. So what you'll get is you're actually distorting the true price of this Bitcoin ETF and Bitcoin period, because this is not going to track right. You're going to get tracking errors. And that's what they mean by Bitcoin futures capacity risk. Now, how many did I lose there? You guys understand the problem that this Bitcoin ETF is facing? I'm hoping you do. All right, see, it got kind of quiet here. But it's total geek stuff. That's just me geeking out, going behind the scenes. Notice also on this list, you see they've got $400 million, 27% of the portfolio sitting in Treasury bills. This is the January, February, March, April, May. The May 19th, 22. They've got $400 million sitting there. They've got some in January 22. So they got bonds here. They have interest rate products. This should be 100% in Bitcoin futures. I don't know. It seems like a fraud to me. Cool. So that's a great one, Margaret. The CME has said that they're going to change, and this is where it gets really stupid. Now all of a sudden they're modifying rules because the demand for this has gotten so out of hand for BITO. They said that for November they're going to raise it to 4,000 contracts. So that would basically just free up pro shares to do what they want. So we should buy the futures. Oh, and this is where it gets really tough. I think what you want to do is you want to be a spread trader. So you would buy the October or buy the November and sell the December or sell the January or sell the March, right? Be a spread trader. To me, this opens up the opportunity. And we don't talk a lot about spreads here. I know we could probably bring Brendan Wendell, who's, he knows way more about spread trading than I do. But essentially, that's it. You're taking advantage of something that might be way overpriced because of demand. I think Bitcoin's in that category. So you sell the December or the January, and you buy the November. And the difference, because what will happen is if Bitcoin just kind of moves up slightly, where like it should, that January contract is going to start to come down in value to meet. They'll meet at a price, right? And I think that the contango effect you're going to get from the futures products makes this BTO a little bit scary. Let's say Bitcoin rallies 30% over the next month. Well, you're not going to get that with BTO. It actually would be interesting. Maybe I'll do that tonight, is I'll write down the price gains today, and we'll map it for 30 days. Yeah, it looks like the market makers are setting, BTO implied volatility at 95. It's pretty damn high. Of course, the volatility of that thing's nuts anyway, but I think the systemic risk here is kind of high with the Bitcoin futures capacity risk. But wait, I'll run through some more. You've got market price variance risk. You've had active management risks. That's basically saying we don't trust our active managers. There's some risk there. That cracks me up. Subsidiary investment risk. You have market volatility risk, investment strategy risk, Bitcoin futures risk, valuation risk, Bitcoin risk, tax risk, new fund risk, non-diversification risk, which is weird because it is somewhat diversified, counterparty risk, borrowing risk, and liquidity risk. I'm sorry to go through all of those for you. I think it's kind of annoying, but I think it's funny, especially having understood the most recent stuff that we've gone through with the FTC. Like, you have to disclose every single risk. I'm surprised they don't have stupidity risk in here. It's just the risk that they indemnify themselves against you doing something dumb. It's bizarre. But anyway, I thought that was interesting to see this huge list of risks that they disclose in their prospectus. So good, no customer risk. John asks a great question. He says, why doesn't XLE have the same issue? Well, first off, energy is a little bit more spread out, right? So XLE represents a huge basket of securities, right? XLE is not futures. It's not futures. XLE is, ConocoPhillips and Chevron, ExxonMobil, and a basket of stocks. That's the huge difference, right? It's backed by physical securities, whereas BTO is simply Bitcoin futures. Does that make sense there, John? It's very simple. NJ says, can you short BTO? Yes, you can. The donkey of the day risk. That's a good one. So it's a great question, John, but XLE won't have that one. If XLE, let's say it was a crude oil futures ETF, right? Which is USO. So does USO have that risk? Yes, it has it. But remember, the market for crude oil futures is much bigger than Bitcoin futures. There's way more participants in the crude oil markets globally than there are in Bitcoin futures. Now, that may change going forward. So what we have with crude oil is, if there was a run on it, you have so many different people, it's not going to be as big of an impact. But because you have such few participants and those who are actually writing the futures contracts, the potential to skew or cause huge variances in price is much greater with the Bitcoin because of low liquidity environments, right? And I think I wanted to present that because as the question came in from, and I got to scroll back 50 different lines, question came in from, where was it? Fiona, about should you buy Bitcoin futures? I'm going to say no. I think that you want to wait. So a couple of different things here. There's the Van Eck one, and there's also, I think it's called the Valkyrie Fund. One of them was supposed to come out today. It might come out tomorrow, but most likely will happen next week. So starting next week, we'll have 3 ETFs for Bitcoin. So what this does is it now removes a little bit of the risk from pro shares, but it also means I have 2 new competitors who are going to have to do what? They're going to have to buy Bitcoin futures because they're futures ETFs. So this is a blessing and a curse. Here's why it's a blessing. well, let's start with the curse. It's a curse because now you have this potential to completely skew the futures market because you're going to have 3 ETFs all jockeying to buy as many of these futures products to accommodate demand. That, I think, would create a lot of havoc. I think it could actually drive Bitcoin price back up here again, and then it'll come, ultimately, I think it'll start to drift back down. That's the curse side of it. The blessing is, for those of us like myself who believe that a physical-backed Bitcoin ETF is the way to go, that's what the SEC is looking at right now. Because this, in theory, creates a somewhat systemic risk for Bitcoin futures. It creates too big of a variance in the actual price of Bitcoin versus the futures markets, which implies more risk to consumers. So by having one Bitcoin ETF, it's actually risky for investors because you could be paying a dramatic premium for the product that you're buying. Now, it would be different if the price of BITO was priced in Bitcoin. So, for example, let me just get my price chart over here and share it with you. If you look at the price of Bitcoin right now, you're looking at a price of $62,956. So if BITO was priced at $62,956, you feel like you're getting a fair price. But instead, BITO is priced at $42.99. So you have no idea what you're getting. You don't know if you're paying a premium, if you're paying a discount, and ultimately this will start to track Bitcoin's price better. But to me, the reason that this is done is to hide those inefficiencies in market. You might be paying a premium right now by buying BITO because they're forced to pay more money for higher futures products, if that makes sense. So again, I think that there's a little bit of a risk here. Are you in Bitcoin? Do you get to experience the moves of Bitcoin? Yes, you do. But don't lock yourself into it because I think the 0.9% fee they're charging is not the true cost. I think ultimately the rate of return is going to be much lower for this Bitcoin ETF. Now, granted, we could throw this ETF in 401ks. We might be able to put it in any other accounts. We could also potentially short it, which is a great advantage. But the rate of return is not necessarily going to be pegged lockstep to Bitcoin. It's going to be, in my opinion, I think it's going to be significantly off given the contango effect, given all the fees that are implied there, plus all the transaction costs, which we'll be passing those on to you. So, Fiona, I hope I answered your question there. Tom says, should we buy some Bitcoin futures? Again, I think spreads would probably be the way to go. I think you could sell the longer term one and buy the short term one because they're jacking up the prices of those long term. What will happen is they're going to drop. So if you sold the long term one and it starts to drop, you're going to make money there, and you'll still make money on your long. So you make money on both of those products. Gotta love that. Let's see. Got it. As long as they have to keep it going, doesn't drive out new. Hold on a second, John. Got it. As long as they have to keep doing it, it doesn't drive out a new norm. Well, I think sorry, I have an issue with my eye. It's been bugging me lately. So you guys have been able to tell. My eye is always squinted on this side. Oh, let's go over here. I think by bringing in more Bitcoin ETFs, we not eliminate, but we start to reduce the problem a little bit. Time will tell, but I think what's going to happen is the SEC, Gensler's going to look at this and go, shoot, if we just let them have physical-backed Bitcoin, I don't have to deal with the derivatives market. Now, granted, that could drive up the price of Bitcoin and increase volatility, but I'm not giving consumers this risk of futures capacity, of contango, and all these other fees associated with it. So Les says, why not trade the options? Sure, that's a way to do it. I think that'd be a good one as well. Why not? Options are fine. Interesting, we talked in the CIL, there's actually options on Ethereum that go into March of 2025 that have huge open interest at $15,000 for Ethereum. Crazy. Let's see what else. Google After Hours, yes. We'll check out Google. Now, I don't know if the Google has anything to do with Snapchat. I didn't see any tie there. I know they weren't supposed to report earnings, but here's your Google price chart. We'll go 5 minutes. And if it dropped $100, that's really nothing. My guess is this is something to do with Snapchat would be my guess. It's only down 2%. Big deal. Look at Snap. Snap's down 23%. So my guess is it's something to do with that. Not sure. I have heard of hut mining. I haven't looked at it though, Chris. So I have to plead the fifth on that one. Let me see if I can bring it up here. Yeah, Hut 8. So there's Hut 8 mining. I mentioned this one the other day. Let's go .d so we can look at the daily time frame. All in all, it looks good. I think personally, mining companies like Hut 8, like Marathon, like Riot, and a few others, MSGI, are probably going to have some issues going forward because so many miners are going to get kicked out because of Ethereum going from proof of work to proof of stake. I think that's my main concern with these ones. Right now, it's glory days, right? The higher Bitcoin goes, the higher Ethereum goes, the more money these mining companies make. But if any of these, Hut 8, and I don't know what Hut 8's distribution is with regards to their mining equipment, but if they're mining Ethereum, which they probably are, all of a sudden, come March, February of next year, they're out of business. Oh, Google didn't have earnings today, did they? They weren't supposed to. I didn't see them on my calendar. Did I miss that one? Let me just real quickly check. I don't think I saw Google on there, but yeah, you never know. I've been known to make mistakes, and you guys have caught me on those before, which I'm happy to do it. Yeah, I don't see Google on my list of companies reporting. You had Intel, but I don't see Google on there. All right, anyway, let me go back to our discussion. Okay, cool. I have not CG. I don't even know what SDIG is. SDIG. Stronghold. Oh, no clue. Look at there's no data here, so no clue. All right, cool. Thank you guys. 26 on Google. Oh yeah, okay, that's what you're talking about. Yes, they actually didn't miss earnings, Ryan. We actually looked at that at the beginning. Take a peek at this. This is why I hate earnings. Here's their earnings. They had a huge beat on earnings. They crushed it, but their forecast was real low. That's why. I don't know, Margaret. Maybe partly due to what you saw there with Google, and maybe the potential for ad revenue hitting a lot of these big companies. Let me go to the next one here. I thought this one was kind of funny. Yeah, there you go. Did anyone get on some of Trump's SPAC today? Literally perfect timing, Big Eb, because I just scrolled the next question, which is, would you buy into Digital World based on the Trump news from Lee? I'm going to go out on a limb and say absolutely not. First off, my days with SPACs are done. I don't trust them. I think that they're just too dangerous. I don't trust the managers to make the right decisions, as I saw with VIH and Backed, which is going to leave a sour taste in my mouth for quite some time. So I probably would not touch it at all. However, this one is one that I would not touch. If you gave me money, if every one of you sent me money and said, please invest this in Digital World so we can get into this Trump's Truth Media company, I would kindly take it and I would invest it in something else that I thought had value and had a future. This looks like the ultimate of scams. Here's why. Basically, Trump has a digital media company that hasn't even formed yet. Right? It's not even formed yet, but he's going to buy a company, change the title of it. It's called a reverse merger. And then he's using a SPAC to bring that company even more money. Really? No way would I touch this thing with anybody's money. Just not worth my time. But hey, if you want to jump on it, it's DWAC, which if you buy it, you're probably going to get dwacked. Here's Digital World Acquisitions. It was up 458% today. It's ridiculous. Now, of course, there's a lot of Trump fanatics out there who are jumping on this thing and pushing it higher and higher and higher. I will be looking I will be looking at this one as a potential short. Honestly, if I can find some options and just buy some long-term ones, I will gladly buy puts on this one at $55. This thing came out yesterday. It was supposed to have a price of $10, right? $10, and now this thing is all of a sudden up at 55. And here's some other little funny tidbits for this. Do you guys remember an investment firm years and years and years ago called E.F. Hutton? They used to have these really kind of funny commercials where like people were talking and all of a sudden heads turn. It's like, when E.F. Hutton talks, people listen. That company's dead and gone. E.F. Hutton doesn't exist. However, today, this company, Kingsworld Capital Markets, actually not today, Kingsworld Capital Markets in June changed their name to E.F. Hutton. And guess who's underwriting this IPO or this reverse merger? E.F. Hutton. So this just seems like the biggest joke of jokes of jokes. And I honestly, I'm sure and again, I'm not polarizing Democrats, Republicans, your love of Trump or hate of Trump doesn't matter to me. If you look at the history of his actions on social media, a lot of it has been debunked, proved to be absolute lies. I mean, there's so many fact checks out there. Granted, some of the things you've said have been very truthful. Others have been absolute lies, just like every politician. And his media site is called Truth Media. I thought that was kind of funny. So yeah, E.F. Hutton is the name of it. But yeah, I would not touch this. No interest at all. I could care less about this one. I'd rather put my money in something that I feel has a better potential. If you get banned from Facebook and Twitter permanently because of your actions and now you want to start your own media company, he will have a lot of people who subscribe to this. There will be a lot of people to subscribe to this, but I personally would just leave it alone. So Lee, not my cup of tea. If it's for you, awesome. Just manage your risk, people. Manage your risk. That's all I care about. I don't care if this is Trump or not Trump. It's just manage your risk. This is way too much for me. You notice down here today, this thing was trading at $10. And now all of a sudden it's trading at 57 and ripping right now in the after-hour session. Exactly. And Lori, I think that's best because that's a universal statement. It's not a political party. It's not polarizing anyone. It's not saying, hey, your politician sucks or your politician's great. I just don't trust him, period. Even members of my own party I look at and go, you guys are liars. There's just no way around it, Okay, let's get off the political bandwagon. Don't care about that stuff. So I didn't, let me see if I can have this one here. There was a chart. Let me see if I can bring it up here. It's called the CNN Fear and Greed Index. They published this one, and I'm going to bring it up here for you just in a second. So there's this right here. Right now it's at 69. Yesterday it was at 72. 67. So it's getting higher and higher and higher as this market goes. And to Mike's question here, who I think is with us today. That's right, CG. I think I told you my nickname or my mantra at college when I taught in Italy, they gave it to me. It says, non mi fido di nessuno, which means I don't trust anybody. Mike says, what's the best bullish bearish indicator? I've been following this one below. And for the first time in months, the indicator is in the greed zone. And that's this indicator you see right here. I will make it bigger so you guys can all see it. Bam. He says the stock market has been climbing the wall of worry for a long time now, and this index has been in the fear zone. What made me feel better was that the market was not at a top. I would also say that the VIX is in the greed zone. I am now more worried that we have reached a top when people are feeling greedy and not fearful, like it won't stop rising. And I agree with you. I think we're at that moment, but you keep in mind, I have been bearish it several times over the years, and I've been burned on pretty much all of them since 2009. Actually, the only time I've done great with some shorts was back in 2020 when we had our pandemic crash. Luckily, I had a pretty sizable options position in puts 2 days before the market really took a dump because of a show we did on Power Trading Radio, which was awesome. So, what's the best fear greed index? I know you're going to be like, come on, Merlin, really, that's it? For me, it's pretty simple. It is price, right? So if I look at this, and I look at it, it says it's at 69. Boy, Elon Musk, loving that one as well. If you get up to like the 90s, I mean, that's when things are just way overbought. And what's nice about this is the calculation. They have a whole bunch of different qualifiers. So it's looking at the safe haven demand, junk bond demand, put call option. So it's using VIX, right? That's your VIX piece there. Market momentum, what's the trend? And it's using a 125-day moving average, which I think is interesting. Stock price breadth, market volatility, price strength. They're looking at multiple factors, and I like that. But I'll be honest, I would simply go to price. Let me get rid of that one. And I just look at this. So here's your daily of the S&P. I would say people are being greedy. Why? Because we had a natural correction, a little pullback here. You guys can see this nice little sell-off we had starting in early September. It started drifting down, making some lower lows, was starting to look like the potential for a new downtrend, and all of a sudden is basically done nothing but go up. You don't have a red candle for 8 days. 1, 2, 3, 4, 5, 6. It's 7 days in a row of just nothing but up. So to me, that indicator should actually be skewed even more above 69. It should be in the 70s, mid-70s in my opinion. I think people are getting greedy here. Now, granted, we're right at supply. Love it. All right, greed at supply, winner. Short that bad boy. You also have this one here. We're at supply, and people are feeling greedy. You have the Dow. Boom. Second day in a row, we're sitting at the high end of that zone. Now, could it break and rip to all-time highs? Yes. My gut feeling says it's going to do that and then come back down just like Bitcoin did. I actually thought Bitcoin would take a couple of more days to rally and then come back down. But you guys saw it rip through the all-time highs and then just came screaming back down real quick. I think the markets are poised to do something very similar right now. And as Margaret says, to quote Wall Street, greed is right. Greed is good. Greed works, right? That's the line from Wall Street. I think that people are being overly greedy right now. But does that mean it can't go higher? No. And again, while I love your comments, and I think you are right, I agree with you. He says, I'm now more worried that we have reached the top when people are feeling greedy and not fearful like it won't stop rising. That, to me, is the recipe for things coming down. However, you got to prepare yourself for being wrong. So, Mike, if you look at this and go, I'm going to be shorting these markets, right? I'm going to short the Dow because it's at all-time highs and we're in supply. Make sure you have a stop loss. Just make sure you have a stop loss because, man, this thing could pop and just scream to the upside, even though it seems, as they would say in Princess Bride, inconceivable. It could still go. It could still keep going. So, anyway. Yeah, those things freak me out sometimes. You just look at it and go, God, this has to go down. No, it doesn't. No, it doesn't. By the way, I don't know if I've mentioned it in a while, but go Atlanta Braves. Just got to throw that out there for you. All right, let's go to a couple more questions here. So Jess, this is a good question as well. I actually touched on this a while back. She says, if you have time, can you look at Western Union? Price has been trending down, but it's right in an area of demand. I think Western Union is like GameStop. I think Western Union is like Blockbuster. I think Western Union is done. Let's WU. Yes. So here's Western Union. You've got this monster sell-off that started in April of 2021. Now, it's right down to these lows, and I can see why. I don't know if I would call this demand. It's just down to some most recent lows. They go all the way back into October of 2020. Personally, I think that digital assets, Bitcoin, I think Litecoin, I think Ethereum, I think Ripple, I think any digital asset where you can send value from one person to another at a fraction of the price, oh, there's your chart, is going to do much better than Western Union. So I think the writing is on the wall for Western Union to significantly change their business model, right? I think they have to. If they don't, they're going to go extinct. So does that make it a good buy at $19? Not for me. Not for me. I'm not a fan of that one. First off, I don't think it's done much over the years. Yes, it's had some big swings, but I would rather take my $19 per share that I would be buying Western Union and find something that might be more internationally used in the digital asset space. And right now, obviously, Bitcoin is the one that's leading that charge. You look at the amounts of remittance payments around the world, and it's in the billions of dollars. And Western Union had a good market share of a lot of that, where people were sending money back home to Mexico or going into international markets. That was Western Union. But I think I might have shown you guys some of the fee structures on Western Union. It's like, oh, you want to send $100 to Mexico? Okay, it's a $25 fee. Like, what? It's a 25% cut? No way. So why don't I just send something with Ethereum? And even with the heavy fees of Ethereum, it's still cheaper for me to use Ethereum and faster. Western Union got picked up. Oh, did it really? That's funny. He said Western Union got picked up by Wall Street Bets. You know why? Because the short interest is probably pretty damn high. Let's take a peek here and see if I can bring up short interest on this one. Bear with me as I pull up this one. This is where I need this is why I love Joe Rogan has a guy who pulls up all the information for him. I mean, it's fun for me to do it, but it's just, you have to deal with me and staring off into space sometimes as I pull up this information. So let's go and look at statistics. Is there on this one? So there you go. Short percent of float, 10.52%. That's not bad. 10.2 is not high. That to me probably is not even going to trigger the short players over there at Wall Street Bets, right? When you looked at what was going on with GameStop, it was like 140% short, which honestly to me should be illegal, but I'm not a regulator. 10% is not that big of a deal. Look right now. This is 10%. Let's just look at Apple. I'm curious what Apple is. Just to compare apples to oranges, but I'm done. Thanks, folks. I'm here all day. Wow, nobody's short Apple. This is incredibly low. I don't think I've ever actually seen a number this low, 0.61%. Nobody is shorting Apple. Let's see, what's another company out there? How about Microsoft? Right? Just look at some of the big, most stable names out there. Wow, real low. Man, just no one's short right now. Interesting. Well, that makes me think that short sellers are going to jump back into these markets at some point. Let's see Snapchat. Since Snapchat got murdered today, 4%. So somebody made a lot of money. When you get into the 20 and higher percentage on short interest, that's when things really start to create problems. That's when I think your Wall Street bets will be alerted to it. Sacco sucks is the gas and Gwei. Yes, certainly the gas and the Gwei fees for Ethereum would be high, but nothing compared to what the cost of Western Union transaction would be. I've in CIL, I'm making transactions all the time. I'm actually trying not to use Ethereum. We tried to make a $1,500 transaction today. We were trying to buy, I forgot what token it was, but it was $1,500 worth, and they wanted to charge $80 in fees. That is extremely high, in my opinion, for the crypto space. But for Western Union, if you're trying to send $1,500, you're probably going to be paying $250, $300 in fees. All right, let's see, September 30th. Yeah, so Mark, that's as of September 30th. And again, these are all lagging. So you can see here, there's a delay between when you actually get the report. So my guess is this is a monthly report, right? And you can see, yeah, I think it's just a monthly report. So that might be higher now, who knows. Anything better than Yahoo or MarketWatch? As a retail guy, where do you go for most up-to-date short interest? That's pretty much where I go. It's all going to be delayed unless you pay for subscription. I like the way FinViz does it. So if you go to FinViz, they have a screener here, and you can see here there's, float percentage. So let's go over 30, right? So this right away is going to weed out so much garbage, but all of these companies, what's kind of weird is they don't show you a column that shows the exact percentage, but every one of these has a 35 or 30% or higher short interest, right? Is it bi-monthly? It might be bi-monthly, but either way, it's not like a real-time thing. So all of these companies, right now there are 30 companies, 28 companies that have over 30% short interest. And notice GameStop. Let's see, is GameStop on this one? Probably not anymore. Nope, no more GameStop. GameStop got off that list. So, but some of these might actually be, real big potential, short squeezes. Who knows? Does Fitbit usually pull from the latest numbers? I don't know. I don't know where they're pulling their numbers from, but I'm generally not the type of trader who's making my trades based off of heavy short interest, right? If I see something that's in an aggressive downtrend and I'm thinking of buying, sometimes I'll pull up and look and see what the short interest is just as a ballpark, but it's not the piece that's going to make the trade for me. So, but there are sites that you can go out there, Alan. You can pay. You can pay to have more real-time data, but I still don't think it's filed that regularly. But most of those were subscription type charts or services. Let's see what else. Is silver still in the downtrend? Oh man, killing me. I'm happy I got out on my silver, but boy, it sucks when you see it jump even higher than when you got out. So here's SLV, down 0.8%, 22.35 today. Is it still in a downtrend? Yeah, I think it is, Rob. But it's just this part here. The good news is you have. I think I look at this perspective, Rob. It's not binary. It's not, is it an uptrend or is it a downtrend? There's transitional periods, right? So it's like, is it starting to get weaker? Is it starting to get stronger? If you look at this picture here, it's looking much better, in my opinion. And the reason for that is you've had this series of lower highs, okay, and lower lows. Going back, and I'm going back into, for those that might be on the podcast right now, I'm going back into May. So if we break this high at 23, that's the second piece of information that I'm going, yes, I feel good about this. The first piece is, right here you have the curl up, right? The moving averages are now turning, which tells you that over the last 50 periods, prices are higher than they have been historically, which is a very positive sign. So that's a positive piece. Now all of a sudden you have, potentially breaching this high here at 23. So it looks like it's turning. It's still in a downtrend in my opinion, but it's getting close to reversing that. It's starting to stall out. How will we know? It's going to have to start making some new highs, or it could come back down and continue on making new lows. So I don't think we're out of the woods yet, but it's starting to look a little bit better. And I agree with Alan. Says sellers are losing interest. Yep. I've been looking at bikini. What are you talking? Double tops? Double bottoms? Let's see. The people who use Western Union are probably the same people who use check cashing services. Yeah, exactly. But I think the more people that realize, it would take one transaction. So if I'm somebody who's been using Western Union to send money to family in some other part of the world, yes, that's normal. But if somebody all of a sudden says, hey, try this XYZ cryptocurrency, it's going to cost you $1 versus $200. I'm in. I don't care. I'm in. Do it. Book it. All right. What else do I see? Did I have any more? Oh, that was actually, I got all my questions done. I love it. Sweet. I got one more. What time is it? Oh, man. Jeff, this is for you. He says, I think Intuit is forming a cup and handle pattern, and I think it will pull back to $540. So we'll take a peek at Intuit. He says, my trading account isn't big enough to sell a put because of other positions I have on. I think price will take off from this area and go up. If I buy a call, he's looking at the January 22 expirations, it will cost me about $24.70, so $2,470 for the option. Since I mostly sell puts, I'm having a hard time getting this straight in my head. Okay, so a couple different things. Here is your Intuit, and I don't know if I would say this is a cup and handle right now. This is a double top, right? But what I think Jeff is assuming or anticipating happening, assuming is a bad word, is that it's going to come back down, maybe somewhere like there, and then come back up, which would, in theory, be a cup and a handle. You could also call it an inverted head and shoulders, right? Because this shoulder here from August 24th through September 24th would be your left shoulder. The head goes from September 24th all the way through to October 21st, which is interesting. It seems like every 30 days it reaches a peak. And now you're saying maybe it'll drift down a little bit and form the right shoulder. So yeah, I can see that. It looks real strong to me. So I definitely echo your sentiment, Jeff, that Intuit looks strong, right? Higher highs, higher lows. We did this pullback, which probably got a bunch of people short, probably gotten me short as well. Now rallied back up to these highs. The question is what happens now? So if you wanted to, since it sounds like you don't have a lot of money in that account, if you thought it was going to drop, you could buy a put outright right now. So you were talking about potentially selling puts, which said you'd like to be an owner of it at a lower level. So let's use 550 as that number, right? Just for sake of argument. 1 second, I'll put 550 on here. There's 550, right? That's that blue line or horizontal line. So if you sold the put, right, you're collecting a little bit of premium, and if it does get down to 550, you would now put that shares and you would be long. However, that's going to be a big capital outlay, right? 100 shares times 550, you need 55 grand just to sell one contract. Well, you can change that, right? You could go out here and buy a put and anticipate that price is going to drop. So just buy a put if you think it's going to go down. And if it does get down here to, let's say, 550, you could close out your put. You could buy the call, which again is going to use less money. And then if that call rises above your profit targets or your price targets, great, you'll do well. So, directional, you're not under any obligation. You have the right to do something, but not the obligation. As a seller, you're obligated to something, whether it's committing yourself to buy it or committing yourself to sell it. In the case of a put, so I would just be going directional here. If you felt that you didn't have the capital to fully build to be selling those puts, then go for it. Just buy a put if you think it's going to drop. And then if it gets to 540, cover your close out your put position and buy a call. And I would go out 90 days at least, right? For me, if I'm buying something directionally, I got to go out at least 90 days, preferably 120. You'll pay a little bit more for that time, but that's okay. And then if it does start to rally and break through, then you'll have a bunch of profit there, and you'll hopefully close it in the money and make some money with it. Let's see, Tom, what do you say? I just looked up another high-cost service like Western Union. Coinstar charged 11 point. Yeah, I know. You know me, I'm not a fan. Well, it's funny. That's a good point, Tom. You kind of know me well, right? I'm the type of person as a kid. My dad, bless him, because I think he really made me aware of how valuable money is, the importance of money, and how you should really watch your expenses. And I'm not a miser. I'm not this guy who doesn't spend money. If you know me well enough, I spend money. but I'm not spending it on something I don't need, or I'm not going to spend on retail prices. Like, I'm the ultimate deal finder. Tom says, I just looked up another high-cost service like Western Union. Coinstar charges 11.9% to count coins. Merlin is probably not a fan. For counting quarters, if you're that lazy that you're going to take your quarters to Coinbase to count, or to Coinstar to count them, shame on you. That's huge money. Pennies, though. Pennies. I have a jar of pennies. I'm not counting those, man. Not worth my time. Take 11.9% to count pennies. That's fine. But if you're taking your dimes, your nickels, and your quarters there, that's just not worth it, right? You're taking too much of the pie. So you're right, Tom. I don't like Coinstar. It serves a great purpose. It used to be like 8%. Then they jumped to 10. I think now it might even be more than 11.9. But yeah. I mean, hey, to take away that effort from me, cool. Okay, let me wrap things up here. Let's go into tomorrow's activity. Boom, boom. Here is the earnings calendar for tomorrow. You have Schlumberger, you have Healthcare, HCA Healthcare, American Express, Honeywell International, Cleveland Cliffs, and Seagate Technology. All of those, because it's Friday, are above market, or before market open. And then your economic calendar for tomorrow, it's a lot of flash manufacturing and services from around the world. You've got France, Germany, the EU, the UK, and the US all coming out with flash manufacturing and services data. So that's the big stuff there. Yes, Margaret, those are the machines in the grocery stores, the green ones. And basically you dump all your change in this little drawer, you lift it up, and it filters and sorts them all. It's awesome. I love it. Tom says, I had a paper route and collected mostly coins, rolled them up by hand, don't let them pile up. Here's what's weird. So now my buddy who has got his own business and it deals a lot with cash, he's all annoyed because he has to use Coinstar? Oh, Clint, be quiet. Coinstar, his bank won't accept rolled coins for some reason. Like, he'll roll them and put he has to, like, do all these weird little loops to have the bank accept his rolled coins. I'm like, are we in that kind of society now? Anyway, we go down that path. All right, I think that's going to do it for me, guys. Big Ed says, had to step away and come back to watch the rest of the show. He did. He's trying to get me to go to an hour, but not going to happen. I got 3 minutes left, and then I've got so much to do. Getting ready for a big party, so I gotta have some fun and get decorations going. Got to get my Halloween costume done. Actually, Halloween's on a Sunday, so you guys won't get to see my costume, but I might wear it on one of the days. Maybe I'll wear it on the Friday before Halloween. Oh no, I'm gonna be in Las Vegas, so I won't be doing that either. So, but at some point I'll show you guys my Halloween costume. No problem. Cool. All right, guys, that's going to do it for me. Hope you enjoyed it. For those that send in comments and questions, I'll give a shout-out to those Jess. We had Jeff, we had Mike, and we had Lee. Apparently, you have to be under 4 letters to get your question read today. If your name was over 4 letters, I didn't read it. I'm kidding. But that's pretty much it. So, yep, you've got the lotto ticket machines. You've got the cash exchange machine. But if it's quarters, don't do it. Count your quarters, man. It's much easier that way. All right, that's going to do it for me, guys. Have a good one. Go Atlanta. That's right. And bring up my Braves as we tail out here. Throw that one up there. Even the anti-Dodgers one for all my Dodgers fans. Anyway, have a great game. I will see you guys all for Friday's session, which I am so looking forward to. A wonderful glass of whiskey. I'll see you guys then. Take care. Oh, yeah, by the way, you got questions? Send them on in. TraderMerlin@gmail.com.